All right, what's the deal with federal estate taxes or paying estate taxes after somebody has passed away? So there's federal and then there's state taxes. They might be called death taxes, inheritance taxes, right? No one wants to pay taxes, but unfortunately, the government's going to try to get you even after you're dead. They're going to try to find a way to get some money. So I'm going to talk a little bit about how those are paid, what they are, and just answer some of the most frequently asked questions we get about this topic. So first of all, what are estate taxes? What are death taxes? Again, as some places call them. Basically, if you have a certain amount of assets, a value amount, when you pass away, the government's going to say, we're owed some money, okay? So let's talk about state taxes, right? Not every single state has estate taxes or death taxes. Florida and Tennessee, where as of now, those are our primary places that we practice, don't have any state taxes, no state death taxes. Massachusetts, they've got some pretty hefty state taxes. So first of all, you may, depending on where you live, you may not have to pay any state estate taxes. There are federal estate taxes, though, regardless of where you live, if you're in the United States. Now, the amount matters, right? Not everybody has to pay estate taxes upon their death, or their heirs, their beneficiaries don't necessarily have to pay it. It really depends on the amount. So that amount changes pretty much every single year. So when you're watching this, the numbers might be different, so you'd want to look that up. But as of right now, in 2023, the numbers are about 13 million per individual, or double that, about 26 million for a married couple. Again, really depends on the year, but that's more or less the amount. And what that means is if you're a single individual and you've got less than $13 million when you pass away, whoever you leave that money to is not going to have to pay taxes. Most likely is not going to have to pay any sort of federal estate taxes on it. If you're married and you combined have 26 million, or less than 26 million, same thing. Your kids are probably not going to have to pay that amount. And the way it works when you're married is typically when the first spouse passes away, he or she doesn't have to pay. If you had more than 26 million together, when the first spouse passes away, he or she's generally not going to have to pay any sort of estate tax. It's at the death of the second spouse when they'd have to pay some, when the kids or the beneficiaries would have to pay. But if you're under that 13 million as a single individual or under the 26 million, it's probably not something you're going to have to worry about. Now, for the majority of people, that's going to seem like a lot of money. Know that that amount is set, again, as of right now, to go down to about 5 million per individual, 10 million per couple, which again, still could be a lot of money, but probably brings in a lot more people who might reach that threshold. And that's set to change in the next couple of years. Again, who knows what happens. So it's just something you have to pay attention to. Now, what you want to look at is it's going to look at basically all of the assets that you're going to have. It's going to look at your house, bank accounts, potentially life insurance policies, depending on how those are set up. Just think about everything that you have. Does that equal that estate tax threshold? And if it does, then your heirs are potentially going to have to pay a pretty hefty estate tax, usually around 40%. So it's a pretty hefty fee, pretty hefty tax that they're going to have to pay. So there's going to be a lot of things that you want to do to plan for that, to minimize that, which is outside the scope of this video. But definitely there's some things that you want to, some planning that you should want to do to make sure, your kids aren't potentially paying hundreds of thousands or millions of dollars in estate taxes. So again, your situation, look at where you are. And one thing to remember as well, like let's say that you've got $1 million, your house is worth $750,000 right now, and you've got $250,000 in a retirement account. You got $1 million, and you're thinking, well, and you're single, I'm never gonna get to the 13 million, but you're in your 40s. Well, it's a long time in theory before you pass away. So there might be some planning that you want to do now to take advantage of changes in the tax laws Because if it goes down to 5 million and you're only 40 right now, it's very possible that your net worth increases to 5 million, right? So what I always tell clients is, don't look at where you're at now and say, oh, well, I don't have that issue. Think about where you are now and what's your kind of time horizon as far as living, your working, your income. Are you going to receive an inheritance? And plan out. But also know that government, Congress, they can't help with messing with the tax laws. So it's possible and more than likely that there's going to be some sort of change. So you want to see where you're at. When you pass away, it's going to be typically your heirs, your beneficiaries who are going to have to deal with that. And it could be through probate if you have not done any sort of planning and your estate is going through the court process, which can make it a little bit more challenging. It's going to go through probate. Or if you've planned properly, you've got a trust and some additional planning, your trustees will be the person or the people in charge of doing that. So that's a little bit about the estate tax. You want to plan for it. Look at your state. If you're in a state where there are death taxes, plan accordingly for that. And then just hope that maybe the government says, hey, you know what? We don't want to charge people. You already paid taxes during your lifetime. We're not going to make your beneficiaries pay. But chances of that happening probably pretty slim to none.